As we mentioned, we don't have today's closing figure, but certainly there are a number of issues that we can talk about, and one of those is the banks and some of the results that we've seen in the first quarter. Pretty positive compared to the same time last year, but from a low base, isn't it?
Yes, thank you for having me. We saw the index reach an yearly high of 4,289 points last week, and from the time it reached that resistance, it has been going down modestly to 4,270 up to yesterday's low of 4,217. So we are really a bit worried, but still optimistic all the same that it will have its support maybe at 4,100 points as the market seems to pick up once again.
A couple of stocks which, Safaricomm obviously is the big foreign investor stock on that market. And today there was a news of possible changes in the regulatory environment. And I wonder, are investors shying away because of a change in regulatory environment, or what is the real reason that there is such an aversion to the NSE right now?
Well, it's expected of any regulator like CCK, that's the Communications Commission of Kenya, to have policies on how these telecommunication firms should regulate maybe their pricing and other facilities. And what we must remember, the Safaricom stocks the results are scheduled to be out by May 26th, and the fundamentals are still the same. We should not see any changes as such, and in fact there have been no changes as such. The share price has been still trading at the 5 shillings 80 cents, 5 shillings 85 cents. The volumes are still more or less the same, and what this may be is more of a passing cloud, and it might not really affect the revenue, as the CEO also mentioned yesterday.
So not much change on Safaricomm, but moving over to another stock that's also in the ICT sector is Access Kenya, which yesterday was down 7% on the back of not so great results. But also there seems to be not much interest in the stock apart from selling it, isn't it?
That's really true. Actually, Access had its best run towards the end of 2007, and we know what followed there was the post-election violence in the country. And ever since, Access has never really made it well beyond the 35 shilling mark. And ever since it hit its high at 40, it has been on a downward trend. Many investors got in when Access Kenya was over 25 shillings, and they feel kind of stuck in the stock. And right now, it's still moving down below the 20 shilling mark. It's not a stock I would be selling. Right now, I would rather be the buyer. But nonetheless, I believe Access Kenya it's still in profit. There is yearly results were really good. And I think this is a phase more than a thing to stay.
There seems to be some speculation around the cash flow situation of that company, and also around why they shifted their AGM. Do you have any reasons as to why they did that?
Well, this might be internal matters. I may not be privy to any concrete information, but I think it's more of a tactic to kind of gain the investors' confidence and kind of get their books right, get their act straight. We must remember that Access Kenya got into the fiber optic market much later than its competitors. So still, I would urge most people looking at the stock, most investors alike, not to get too scared about this and maybe give the company time to put its act together.
Robert Munuku, research analyst at Drummond Investment Bank, thanks so much for joining us here on Regional Roundup.